Hey everyone, Paul Clark here, and 2020 has been such a crazy year that I thought we could all deserve and use a spa day, okay? So that's what today's going to be about, and by that I mean we're going to dive into an analysis on One Spa World, okay? So I'm going to talk about what the company is and why I actually like it and why I'm currently investing in it, okay? So with One Spa World, they operate spas on cruise ships, and they also operate on resorts. So they currently are installed on about 100 or partnered with about 175 different cruise ships, and that crosses about 20 different cruise line brands. So really, when you think about all the big cruise line names from Norwegian or Carnival, Princess, Virgin, they've really kind of got a presence on all of them, and not just a presence. They actually, when they're sailing, they've got over a 90% market share on those cruise ships, okay? So, and again, when you think about their services and their products that they operate fitness centers, they do their spa treatments, they sell products, they offer services, so if you want a seaweed mask, if you want, Botox, really, any of your typical spa treatments, you can get them there. Now, why do I actually like this company, right? We all kind of know that cruise lines have been beaten up. It's not really a place that you think is the safest place in the world. Well, I think one of the things that makes One Spa World safer is the fact that they just recently went through a private placement of $75 million, an injection of capital from Steiner Leisure, okay? And that injection of capital is actually giving them a projection from their management team that they're going to be able to have liquidity through the end of 2021. So even if there's actually no sailing, no cruising taking place, and they really have no significant revenue through all of 2021 and the rest of 2020, they still are in a situation where they can survive that, okay? And I think that that's a really encouraging sign. And I think that as soon as that deal was done, the market responded very favorably to that. They bounced off their lows, and they've kind of really, held their ground since that announcement came. I just find that really meaningful. But, I think when you're also investing in something, that it's not enough to just say, I think something's cheap, okay? You also, in my opinion, you also have to say, well, why do you think it's going to actually be something that's going to grow over time? Well, again, going back to their 90% market share that they have on these cruise ships, when you think about the actual demographic of your typical cruise consumer, there's somebody who has an average age of about 49 years old. They have a household income that on average is about $114,000 a year. And, they're generally going to be going on a cruise about once every 2 years, and then on top of that, when they're actually cruising, the demographic of your typical cruise consumer, again, they're going to be spending anywhere between $200 to $300 on spa services in normal times. Now, of course, we all know that it's not currently normal times, and we know that right now that the CDC, they've kind of offered some guidelines and said that they're recommending that cruises don't take place through the end of October. And that's something that the official designation kind of came out with that revision, but the cruise industry was really kind of preparing for that already, so that wasn't really something that kind of rattled them too much. At least I don't think so. But now you can also say, what does that transition look like? And we certainly know that it's not going to just go from zero to full capacity. We are expecting a lot of these cruise ships to be operating at half capacity when they actually are approved to sail. And what's really encouraging is the company, again, has come out and management has offered guidance in their quarterly update and said, hey, even if we're actually operating on cruise ships that are at half capacity, we actually, the economics work out where we would be breaking even in terms of EBITDA, okay? So if they're essentially, they're in a spot where they're operating, they're starting to get the team back together, and if they're able to do that and break even, I think that's very encouraging, because then, of course, really anything above 50% is something where they're going to start to generate some real meaningful profits. And when we look at this company, by the way, we can go ahead and talk about what their full year revenue was for 2019. So their full year revenue is $562 million. It's still a relatively small company. We talk about revenue in the hundreds of millions as opposed to a company like, an Amazon or some behemoth like that. So certainly a smaller company. Their market cap is actually $480 million. I was going to do this video yesterday when their market cap was $440 million. So this stock is actually worth $40 million more today than yesterday when I was going to film it. So, hey, don't want to waste any more time, I guess. But, when we consider those two numbers together, we consider the fact that, okay, in, again, full year 2019, we know that they were generating $562 million of revenue, and they're currently trading at only $480 million. So we know that, if they're able to return by 2022, 2023, if they're able to return to the full year sales from 2019, then you would be able to be picking this up for well below one-time sales. So they're about 15% lower than what their would be if they were just exactly priced at their sales number for those future years. So I think that's advantageous. And again, I think that in addition to what this company has been doing to survive 2020, one of the biggest things was the liquidity and securing that $75 million, which by the way, wasn't just liquidity. This was actually a deal set up that allowed Steiner Leisure to acquire warrants to be able to purchase 5 million shares of this stock at a price of $5.75. Okay, so I think that the fact that they're actually wanting to get warrants out of this deal shows that they expect this thing to, be in the right direction, and they're relatively bullish about this, right? If they're negotiating those warrants, you also consider the fact that One Spa World has 10 spots available on their board, and now Steiner Leisure with this deal is actually going to have 3 board members on that board of directors. So again, you're going to have 3 board members that are going to be, really interested in wanting to make sure that those warrants that allow them to buy the stock at $5.75 are going to be worth as much as possible. Okay, and I feel like when you have management that is properly incentivized, where when they're making money, that shareholders are making money, I feel like usually good things happen. Not a guarantee, but I feel like when those two things align, I want to be a part of it. So happy to see that that's coming together here. And I think a big positive of One Spa World, when you look at this company too, is the fact that they don't have the big capital expenditures associated with operating cruise ships. Okay, so between the actual capital expenditure of purchasing the ship, maintaining that ship, things like that, so their costs, I feel like are a lot more contained, which I think that's something where when they're shut down, I think that's what's going to allow them to actually survive this. Because again, even if it actually was another 6 months or whatever time frame that looks like before they're able to start resuming kind of some normalcy in their operations, they basically right now have all of their variable labor that was going to be on the ships, things like that. They're not currently on the payroll. They actually announced that they were going to be laying off about 38% of their corporate staff. Okay, so there's some overhead there that they can't entirely cut out, but a lot of their variable labor, has been reduced. And they've also been saving money by, deciding that they're actually not going to be paying out the dividends, which I think in times like this, I think being able to take advantage of buying companies when they're cutting the dividend because, they're surviving and they have a plan in place to survive, again, like with their liquidity position with a $75 million infusion, that to me says that, hey, it's the prudent thing to do. I think that when they actually return to profitability, of course they can reinstate that dividend, and by the way, the dividend that they were paying was about 4 cents a share. So at the current share price, trading about $7 a share, that would represent about a 2.2% dividend, based on today's cost dollars, if you were able to buy that. So the dividend is not hugely insane there. I think that the bigger opportunity with this company is going to be share price appreciation. Another thing to like, so this is something that the management team kind of pointed out in the Q1 earnings call, and they said that, hey, before, kind of the world went to hell, okay, that, the first part of 2020, that when they were looking at their productivity metrics, when they were looking at onboard revenue, those were all on pace to be beating the prior year. So again, 2019, their revenue was already the $562 million. They were on pace to be able to beat that in 2020 before everything kind of fell apart. So that's even kind of a bigger story to say that if they are able to kind of resume to full operation by 2022, 2023, right? And then that means that, they have the potential to even surpass the $562 million by those years, which would, from a price of sales, make them even more favorable for what you're getting right now. Okay, so that's a little bit of the overview, again, about what this company does, why I like them, and I feel like, again, I want to hammer this point home as much as I possibly can. I think that whenever you're going to be investing in a company, if you are going to make the decision to buy individual stocks, I feel like you have to answer those 2 questions. What does the company do? Really understanding what they do, and how they make money, and why you think it's going to be a good long-term investment. And I think of course that's important too, because I think a lot of times people can say, hey, something's really cheap, and they're like, that's why I want to buy it, that's why it's a good long-term investment, it's cheap. Well, just because something's cheap doesn't mean that it's just a good long-term investment. You still have to understand, okay, I think it's going to be a good long-term investment because I think that, again, I believe that travel is going to come back, and I certainly think, by the way, that leisure travel is going to come back faster than business travel, okay? So with that in mind, I'm like, I think, leisure travel is going to come back faster. I think when you look at the cruise industry, that the economics and the industry trends were running very, very strong and stable prior to this disruption. I think that the world will get back to this. And again, a lot of the cruise ships have actually already been providing some guidance that 2001 that they've been experiencing some pent-up demand from the consumer that, hey, they want to get back to sailing, and they want to do it safely, but they want to get back to enjoying things, right? Because I think we all know by this point that you can't enjoy company, you can't enjoy experiencing life the same way through Zoom as you can actually getting on a ship and going to the actual island and going on excursions and seeing things for yourself. Okay, so it's a completely different situation. But I think that, again, those two questions, like, what do they do? Make sure you understand it, right? Which in this case, I mean, it's, being a spa, I think, again, it's something that a lot of us have experience of having seen firsthand. We can understand that business model. We understand some of the products and services that are offered. And we can also understand, again, in this case, why I'm actually bullish on their future. So this is the overview of One Spa World. This is why I like them. I think it's going to be a good investment over the next few years. I'd love to know what you think. So any input, any questions, go ahead and let me know in the comments below. But thanks for checking it out. Happy investing.